Hi everyone, good evening. My name is Archana Bakshi. I'm a qualified CA and today I'll be taking you through the Preseen analysis of SBL which is valid for December 2025 exams. So if you all remember, I hope everyone has seen the Preseen by now. So this Preseen pertains to the hotel industry and the name of the case company is Levwell, right? It's a 4-star company. Also, it's a differentiator company. So the generic strategy of Porter which is adopted by this company is differentiator. It's not a cost leader company. We are differentiators. Why? Because we do not have standard designs in our hotel rooms. We want to provide our experience. We want to provide unique, exceptional experience to each of the customers. Unlike the other hotels, unlike the other business models adopted by other hotels, we are not in urban areas. We do not have standard room sizes or standard layouts, right? We are in coastal areas, rural areas where the occupancy rate is low, right? So these are the various factors which signal towards the fact that we are not a cost leader company but a differentiator company. Now in today's session, I want to take you through, first of all, let me just let you know that what are the various topics I'll be taking you through in this Preseen lecture series. It will be 7-8 sessions and I will be taking you through around 70 subtopics and I am going to basically map the Preseen with the syllabus areas, right? So this is just a small, it's a snapshot of what I'll be explaining you in the forthcoming sessions. So should Levwell expand into urban areas? Presently we are only working in the rural areas, coastal regions, right? Where people can do leisure activity. We are basically near the places of nature, okay? But should Levwell expand into urban areas? Should Levwell change its strategy? Should Levwell turn to being a cost leader from a differentiator? Or should we pursue both the strategies together, which is differentiation and cost leadership? If yes, how? Because there's a high risk that we are going to dilute our identity, we are going to confuse our customers, our brand image, reputation may also suffer, right? So I'm going to explain you some real life examples of how companies like Marriott, how hotels like McDonald's are selling or are renting out luxury spaces as well as budget hotels under different brand names, right? So I'm going to take you through all of that. Now, what are the various problem areas of Levwell? I will be talking a bit about that. Okay, our employee turnover rate, it's too high, 38 to 41%, it's high. Even though our operating margins are better than the industry average, the cost is rising in S-Land because S-Land is facing inflation, right? Unlike the other hotel companies in S-Land, we do not have any mobile application, right? We do not provide any digital access, digital check-in and check-out using our mobile app to the guests. Even though we have an application for our employees, for the housekeeping staff, etc., but we do not have any application for our customers, right? We are also not using the dynamic pricing model. We are not using the yield management system which the rest of the hotels in S-Land are using, right? So it's a fixed pricing which is decided at the beginning of the year, which means that either our prices, we are running a high risk of our prices being too high or too low, right? So we are not using AI, we are not using artificial intelligence in deciding our pricing, which others are using. So we are not providing, even though one of the mission of the company is to provide an exceptional customer experience, yet we are not innovating. Okay, we are not innovating much. We do not have an application. We are not using yield management softwares, right? So these are some problem areas that we are facing. Also, another issue which I could note from the Preseen was that we might face some cash flow problems in the exam. Why? Because see, otherwise our gross profit percentage, all the figures are quite good. Okay, if you check out the graphs which are available on the last page of the Preseen, the graphs are pretty good. So which means that in the examination, we might face some cash flow problems. That is why there's a reference of franchising given in the Preseen. There's a reference of sale and leaseback given in the Preseen. Do not worry, I'm going to take you through everything in detail. So these are some problems which I see. Now we are not taking any advance payments. If you check the Preseen, all the bookings have to happen in advance. If someone wants to stay in our hotels, they have to book in advance, that's okay. But we are not taking any advance payments from them. Customers during checkout pay us, right? We might face cash flow problems because of that. Our cash is stuck there, right? So this can be changed, right? Because usually you need to pay in advance. So I will be discussing the problem areas of Levwell in detail. Now for today's session, basically I'm going to cover this part. Can we change our business model from being asset heavy to being asset light? And then we are going to talk about the 3 asset light strategies that we can pursue: mergers, acquisitions, franchising. I'm going to discuss about this in the forthcoming sessions. Should we open budget hotels in the urban areas? Means we are changing our strategy from differentiator to cost leader. Should we completely change it, or should we pursue both the strategies? And if at all we should pursue both of them, then how should we pursue them? Because otherwise there is a risk of brand identity dilution and confusion amongst the customers. Next is yield management software. We need to invest in that. The problems with dynamic pricing and the benefits of dynamic pricing. A bit about big data, talent management program, because our turnover is too high. This means it's a highly likely question that they might test you on talent management. Risk management, yes, they have given us certain risks which the company is facing. There is a possible question on risk management. Then questions could be asked on Mendelov matrix, the board committees and functions, board diversity, role of non-executive directors, should chairman and the CEO be separate, why, the benefits. Then some internal control weaknesses and recommendations could be asked. Okay, the 4 lines of defense. Basically, this is a question from the risk chapter. Okay, they can ask you this. Then role of internal audit, because we have internal audit function in the company. Our board is well balanced, which means that we have enough number of non-executives in the company, right? Now a question on integrated reporting, 6 capitals is possible. Risk register could be asked. The contents of risk register, is it adequate or not? Something about the green customers, because in the Preseen also there is a mention about green customers, especially these business travelers. These are very green customers. Why? Because see, corporates have an identity. Corporates try to do less travel. They try to do more virtual meetings, which also helps the environment as well. So what should we do as a company to attract these green customers, right? Then there could be questions on environmental reporting and the environmental reporting standards that we have. Then ethics, bribery and corruption issues, how to fix bribery and corruption, responsible leadership, ethical leadership. So these are some questions that I'll be covering in the forthcoming sessions in detail. Then a bit about PESTEL, Porter's 5 forces, Porter's diamond, Porter's value chain, the SWOT analysis, Porter's generic strategies, how to do cost cutting, because even though we are a differentiator, every company needs to do cost cutting, especially, Estland is facing inflation. So we need to cut down our costs, even though our operating margins are quite good. They are quite steady, right? In fact, we are better than the industry's average. Industry's average is 10%. Ours is more than 13%, which is a good figure. Now, what are the various revenue growth strategies? How to improve our revenues? How to do customer segmentation? See, right now, probably we are not doing any customer segmentation. We are not doing any tiered pricing. Tiered pricing is what? Wherein we basically have very basic services available, like a basic budget room available, and then you have a silver plan, then you have a gold and a diamond and a platinum plan, right? So it keeps becoming pricier when you see advancement in the plans. So we are going to talk a bit about the tiered pricing also. See, standard fixed pricing won't help us. The pricing has to be dynamic, which means you need to change your prices basis many factors like what your competitors are charging, how much is the demand, Is there any event? Let's say Ed Sheeran is performing near the hotel, which means that the demand would be too high, which means that the prices have to be too high. The prices need to be increased. So one aspect is dynamic pricing. Another aspect is tiered pricing. Tiered pricing means do not have a flat rate, do not provide same services to everyone. Okay, provide basic services to people who want just very basic services, and then add restaurants and spas and gyms for the people who want these services and are ready to pay for these services, right? So tiered pricing. In fact, segmentation has been asked many times in the exams. I remember there was a past exam on gymnasium. So it was a fitness club, and this fitness club, there was a question, how can this fitness club do segmentation? So there could be questions around that. And then the CRM software, right? There's quite a lot of information about the various systems which the company is using. So we have a booking system, we have HMS, which is hotel management system, and then the employees also get to use an app on which they keep posting, they keep updating the app on how many rooms are available, how many rooms have been cleaned, how many rooms are yet to be cleaned. So likewise, then digital marketing. I will be discussing a bit about digital marketing as well. Then BCG matrix, even though the chances of something like BCG matrix getting tested is quite low, still I would be giving you some possible answers for the same. Then ANSOF matrix, vertical integration, horizontal integration, joint ventures, even though the chances of joint ventures, again, it's too low. Franchising is highly likely it is going to be tested, right? Also, we might on the exam day, we might face some cash flow problems. And now franchisee is the best way to recover, to get some instant money. Then mergers and acquisitions, quite possible. Okay, we might acquire another chain, another smaller chain, quite possible. Then questions around leadership could be asked on charismatic and transactional leadership, cultural web. So I'm not going through everything, okay, right now. So this is just an index, you can have a look. Questions on big data, then project manager and sponsor roles, the various committees, because this company has 4 committees, these audit committee, remuneration committee, what are the benefits and roles of these committees, right? So this is all about the index, which I'll be explaining in the forthcoming sessions one by one. So my agenda for today's session would be discussing this part. Okay. So this is what we are going to discuss today. The topic is, can we change our business model from being asset heavy to asset light? What do you mean by asset heavy and asset light? See, at present, we own these 35 hotels, we own the facilities in these hotels, we own the buildings and everything, right? We are not just managing the hotel, we are also operating the hotel, we also own the hotel, right? But we are doing, every 10 years, we are doing refurbishments as well. The refurbishments are very expensive, right? So in the exam, we might face these again, as I said, cash flow problems could be there. And you know what, in real life also, there are many other hotels which are following this model. They are asset light. So there is a hotel which is Four Seasons. Four Seasons uses an asset light model, right? So we can explore an asset light model by entering into a management contract with a hotel or a building owner. Now the question arises, what do you mean by a management contract? A management contract is a contract when the hotel owner owns the building and the property, whereas the hotel operator like Four Seasons manages the hotel on their behalf, which means that we do not own the building. The building is owned by someone else, and that person, the owner of the building, asks Levwell, for example, to manage the building, okay, set all the SOPs, the standard operating procedures, hire the staff, train the staff, set the quality standards, give training to the staff. All the management and the operation of the hotel would be done by Levwell, but Levwell doesn't own the building. So what does Levwell get in return? Levwell gets a management fee. Maybe it gets some percentage of profit from whatever profit we are making, or some percentage of revenue, okay, or some management fee, right? So here what happens, since our costs are too low, okay, because we are not incurring other expenses like refurbishment costs, etc. So our return on investment increases with this kind of a model, which is management contract. And companies like Four Seasons are using this strategy to reduce their costs and earn higher returns. Okay, so this is what happens in a management contract. So the hotel operator, which is Four Seasons, will provide you the brand name. Okay, basically the hotel will run, even though the hotel owner is someone else, the hotel will run under the brand name of Four Seasons, right? All the management expertise will be of Four Seasons. SOPs, the pricing strategies would be set by Four Seasons. Marketing would be done by Four Seasons. The website, the booking system, all the CRM systems, staff training would be given by the Four Seasons, right? So what does the operator earn? Operator means Four Seasons. Four Seasons is going to earn a management fee which is a percentage of revenue and sometimes a percentage of profit also. But they never own the building, right? Now, what is asset light model? Asset light model is very simple. We don't own the building. We just run the building, we operate the building, and we get some percentage of revenue or profit as a remuneration. So this is the asset light strategy, right? And Four Seasons. Now, why is this company Four Seasons using this model? See, if you want to expand fast across the country, and not just country, globally, because this company is not a MNC, means we do not have our hotels in other countries, right? So if we want to set up our hotels, if we want to expand our business to the rest of Estland and to overseas as well, in this case we can explore this management contract model. Other people who have buildings can ask us to operate the buildings, operate the hotels in our name itself, and they also make some revenue out of it, we also make some revenue out of it. So there is a revenue sharing which happens, right? And mind it, this is different from franchising. I'll tell you what happens in franchising in a bit. But both franchising as well as management contract, both of them are asset light model. And not just this, even the sales and leaseback is also an asset light model, and there's a very high chance they are going to test you something around this. We might either be using the franchising arrangements, or we might be using the sale and leaseback models, or we might be undertaking this management contract, or maybe all of them together. But we are definitely going to do this, right? So why Four Seasons uses this model? You can do fast expansion without any major investment, because the hotel is not ours. We do not need to purchase the hotel. We do not need to pay rent for the hotel, right? Now, lower financial risk. They don't carry any building costs, any debts, any maintenance costs. All the renovation of the building, all the refurbishment of the building, all the regular maintenance of the building will be undertaken by the hotel owner and not Four Seasons. So all of these are paid by the hotel owner, right? So what does the hotel do then? Means what does Four Seasons do then? Four Seasons will only focus on luxury service, providing training, providing exceptional experience to the guests, training the staffs, quality control, etc. Now comes then what is franchising? Franchising is a bit different. In franchising, see, in the case of management contract, Four Seasons or Levwell is going to operate the hotel. But in the case of the franchising arrangement, the franchisor is not operating the franchisee. The franchisee is operating the franchisee, right? So first of all, who runs the hotel? In the case of management contract, Four Seasons itself is going to run the hotel. But in this case, Four Seasons will not run the hotel. Someone else, the franchisee, is going to, franchisee is the person to whom we have lent or to whom we have sold our brand, our basically our logo rights, our brand rights, right? They can sell our goods, they can sell the goods and services in our name. So those are franchisees, right? Who hires the staff? In this case, the Four Seasons is going to hire the staff, means all the management decisions will be taken by Four Seasons, means the operator. But in this case, Four Seasons will have no say. It is the franchisee which is going to hire the staff, okay? So another way of pursuing the asset light strategy is by selling our rights, our franchising rights to the franchisees, okay? If someone has a building and they want to convert it into a hotel and they want to use our name when they function as a hotel, that is a franchising model. Franchising is equally good. Franchising is also an asset light model only, because in the franchising model also, we don't own the building, okay? We don't own the building, and also we don't even run the building, right? See, in management contract, we don't own the building, but we run the building, we run the hotel. In the franchising model, neither do we own the building, nor do we run the operations, right? And we also get instant lump sum money, because when we sell our rights, when we sell our rights, our name, our logo, our brand name, we get instant money, and then every month, every year, we also get a share in the revenue or the profits, right? So franchising even reduces our burden much as compared to management contract. Next is, who makes decisions in the case of management contract? It's the operator, means Four Seasons or Levwell is going to make decisions in the case of a management contract, but in the case of franchisee itself is going to make most of the decisions. But yes, the marketing related decisions, okay, and some other very major decisions will be taken by the operator, but in compliance with the instructions of the franchisor. In compliance with the instructions of the franchisor. So they have to follow the brand rules. For example, if let's say Levwell has a franchisee, and Levwell decides that, you know, in the month of January, throughout January, we are going to give a 20% discount, then the franchisee which has purchased the rights of Levwell has to follow these instructions and these discounting policies of the company, right? But most of the decisions are taken by the franchisees independently. Who owns the building? In the case of management contract, the owner owns the building, and in the case of franchisees, the owner is basically the franchisee itself. Usually, unless the franchisee has also taken it on rent from someone else, then the owner in that case. In this case, the operator role is full management, right? But in the case of franchisee, we just have to. So what's the role of the franchisor? What's the role of the franchisor in a franchising arrangement? The franchisor has to provide some training like soft skills training, how to serve the customers, how to greet the customers. This basic training has to be provided by the franchisor. Otherwise, other decisions, other management is done by the franchisee. Now, if I talk about the management contract, the management contracts are common in luxury hotels, but franchising is most popular with the mid-scale hotels. So now let me give you some examples. Four Seasons, it's a hotel, it uses management contract, whereas hotels like Hilton, Marriott, they use management contracts plus franchising models, okay, which means that Levwell can also use both of these models, management contract model plus franchising model, plus we could also sell some of our assets and lease them back. So sale and lease back plus management contract plus franchising, all these three strategies can be pursued by Levwell. Okay, this means what would happen with the help of these strategies? We would have a lot of cash available with us, which means we can invest this cash. We can invest this cash in developing a mobile application, because we do not have any mobile application for the guests. We can also invest in customer relationship management software from the Preseen. It doesn't look like we have a CRM, right? So we can invest there. Okay, we can try to have a mobile application, and we can make investment in innovation. We can do more innovation. Okay, so basically pursuing these three strategies, which is sales and leaseback, management contracts, and franchising, will provide us with a lot of free cash. One benefit, fast expansion. Second benefit, and third benefit is we would not feel much burdened because of inflation. It would help us in reducing our costs, right? Because every 10 years we are doing refurbishment, and refurbishment means renovation and redesigning your cafeteria, etc. So it's a big cost. It's a huge expense that we are incurring every 10 years on all our 35 hotels. So it's a huge expense, right? So it would save us from this huge expense. And if I talk about McDonald's, McDonald's is mostly into franchising. If you want, let me explain you with a simple example. For example, there is an investor, okay, a person has a lot of money, he builds a luxury hotel, but he doesn't have a brand, he doesn't have a goodwill. So he asks Levwell, can you provide me with the franchising rights? And I want to operate this hotel myself under your name. That is a franchising model, right? On the other hand, Levwell approaches this hotel owner and asks them, can you let us operate this hotel under our name? Even though you own the building, you own the hotel, we would be operating and managing it fully, right? So basically, if I compare management contract with franchising, the burden is more. The burden on on the brand is more in the case of management contract, because in management contract we are also operating the hotel. Okay, so these are the three strategies. Okay, so the top three asset light strategies that we can pursue. One is franchising. So in the exams you should know the benefits of franchising. I'll be discussing them in the forthcoming sessions, the benefits, the problems. And same goes for management contract. What are some problems we might face when we enter into management contracts? And then the sale and leaseback part. In the sales and leaseback, there are some problems, even though the benefit is it basically generates immediate cash. It reduces the capital employed and helps fund the expansion, because sales and leaseback is going to free a lot of cash which can be further invested. Okay, we have shareholders, we can reinvest this money in a lot of projects. Okay, maybe we want to acquire some other chain, and for that also we need a lot of money. So sale and leaseback is going to provide us with extra money, extra cash, which will not just help us in doing further innovation like mobile application and CRM, it would also help us in acquiring another hotel chain, right? So this is all for this lecture, but in the forthcoming lecture I'm going to take up another topic, which is, should we open hotels in urban areas and start serving budget customers also? And if at all we want to pursue the cost leadership strategy, how exactly should we pursue it? Should we keep a common brand for selling budget as well as luxury services, or should we have unique names, different brand names for luxury and different brand names for budget hotels? So if I talk about Marriott basically uses different names. So Marriott provides luxury services under the name Marriott, JW Marriott, and then it also provides budget services under the brand name Moxie. Why? Because we don't want to keep a common name. This will just confuse the customer. It will dilute our identity. We want to keep our identity intact, right? And then they also serve, they also provide mid-scale services. Again, and the name that they have chosen for this is Courtyard. So Courtyard, Moxie, and JW Marriott, all of these are Marriott names only. All of these are Marriott brand names, but these are for different types of services. One is for luxury, another is for budget, and another is for mid-scale. So that's all for this section. Yeah, okay, bye everyone.